Welcome to the North Forge Discovery Series. My name is Tina Lee, and I'm the Marketing and Events Specialist here at North Forge. For today's webinar, we'll be chatting about filing and paying income taxes, sales taxes, and payroll deductions. Before we begin the webinar, we acknowledge that we are meeting virtually on the ancestral lands of Treaty 1 territory, the traditional gathering place of the Anishinaabe, Cree, Oji-Cree, Dakota, and Dene people, and the traditional homeland of the Red River Métis people. For those of you who are new to our webinars, North Forge is the innovation partner for the province of Manitoba and an incubator accelerator supporting the growth of Canadian science-based, technology-enabled, and advanced manufacturing startups from the ideation stage all the way through to acceleration. We fuel Manitoba's innovation economy, providing entrepreneurs with industry-leading mentors, award-winning growth coaches, and rockstar subject matter experts in our new 4-stage founders program. North Forge also has North America's largest nonprofit publicly accessible fabrication lab located in Winnipeg's Exchange District. The Fab Lab has in excess of $3 million of advanced manufacturing equipment that has helped more than 3,000 entrepreneurs develop over 7,500 prototypes since 2011. The North Forge Discovery Series are free events that we host in conjunction with and promotion of our Founders Program. If you have a business idea and would like to find out more about our Founders Program, please visit our website or reach out to our Program and Communications Manager, Krista Kowalik, and I'll place your contact information in our website in the chat shortly. And with that, I welcome Michael Glazier, CPA and CA founder of Glazier Accounting. In 2005, Michael graduated with a Bachelor of Commerce with honors and a double major in marketing and accounting from the University of Manitoba. Post-graduation, he moved to Victoria and worked with Tree Home and Company, where he successfully researched, planned, and implemented a conversion to paperless office while completing his chartered accountant designation. His proudest moments are when he could eliminate the file room and convert square footage into revenue-generating space as a senior manager at Winnipeg-based Brook and Partners. Michael feels that knowledge is meant to be shared and that strong engagement amongst the community members, employers, staff, and management makes everybody stronger. He has been able to expand his practice to the community by mentoring new businesses at Futurepreneur and participating in ramp-up weekends as an advisor and teaching courses at Entrepreneurship Manitoba. And now, Michael, the floor is all yours.
Hey, thank you for the introduction. I think that's the first time I've heard that read back to me. Well, welcome everyone. I appreciate you attending here. As you probably read from before, this event is kind of a very top level, more administrative topic of, okay, just how do you file? What are certain dates? What are the areas you can get in trouble with? There's another course where we'll be taking a deeper dive on, why to incorporate, et cetera, how some nuances. I might touch on some of that stuff, but my intent is not to go in depth with any of those particular topics. But I will pause for questions, as Tina had said. If anyone has a question that relates, really to their particular situation, I may suggest that you email or give me a call later. I'll be more than happy to answer that, free charge there if it's a couple-minute thing. I just don't want to, with the 40 minutes we have together, I don't want to go down the rabbit hole on any one person's issue unless, it's relevant to everyone. So with that, I suppose we can get going here. So, yeah. So yes, income taxes, sales taxes, payroll deductions, also known as the 3 ways CRA can really ruin your day. So as Tina said, I went out on entrepreneurship myself, thanks to Futurepreneur and North Forge back in 2017, but I've been doing this since 2005 and being pretty much on owner-managed small business and taxation the whole time, as well as, being an efficiency nut. Okay, so for today's content, we're going to touch on income tax filing information for both personal and corporate taxes, GST and HST filing information, the Manitoba RST filing information specific to here, I'm going to touch on the health and education levy, although that's probably not relevant for most of you, because it only really kicks in when you start having like $1 million payrolls, but hopefully some of you are there in a year or two, so it might be relevant. And then payroll source deductions specifically. Now, just to let you know, there's a bit of a nuance between a couple of these. Income tax is amounts that you owe the government as a liability based on your income. So it's really, a payable. GST and payroll source deductions that you withhold from employees are considered CRA's money that you're holding in trust. So it's never yours. So you don't owe it. Your employees or your customers owe it, and you're the agent. I mention that because CRA is far more aggressive on trying to get their source deductions or GST, which they already consider their money, than income taxes, and Manitoba RST even more so. So, there's kind of a tier, if you have to, of what you should remit. Source deductions always, RST always, and then GST, and then income tax at the bottom. And some of that is based on even just the level of penalties that will kick in, which we'll touch on later. Okay. Any quick questions on today's content, or something else maybe that people were hoping to see that maybe I hadn't considered? No? Okay, then we'll move on. Okay, so for income tax filing information, number one is just personal taxes. We all have to file. We all should be filing, especially if you're an employee, because the system is set up to give you your money back, so they don't need to chase you. So if you don't file, you're just giving the government an interest-free loan in 99% of the cases. Very simple deadline on that one. It's April 30th to file, if you're not self-employed. And this also includes if you have rental properties, heavy investments, etc. You have to get your return filed before April 30th to avoid any late filing penalties you might have. Although those are always based on taxes owed. So if you are late, but CRA owes you money, there's no late filing penalty. If you are late, but you paid before April 30th and enough to get a refund or to cover the amount owing, there's no penalties for late filing. So if for some reason you don't have paperwork done, you can miss that filing deadline so long as CRA has at least enough money on hand to cover it, or most of it, because the penalty will be based on the unpaid portion. Again, we'll touch on those a little later, but I get a lot of people that panic about, oh, I have to get this in April 30th, and they're getting like a $3,000 refund. And I'm like, well, we don't need to. It'd be good to, but if you're busy taking care of your sick mother or something, like, give it a day or two. It doesn't matter that much, if other things are getting in the way. For self-employed, it's a little bit different. The CRA gives you an extra 45 days to file, or 46, I guess, with a June 15th filing deadline by default. And this also applies to your spouses. If you, even if they are themselves not self-employed, they also get a June 15th filing deadline before penalties apply. However, the point when they start charging you interest is still April 30th. So you can file it June 13th and you won't have a late filing penalty. But if you make a payment that day, you'll be charged interest as of May 1st for any amounts owing. Now, the prescribed rates are 5% annually currently. So it's not like a massive amount. If you calculate, if you owe them $1,000 and it's outstanding for a year, you owe them $50 roughly. So, we're talking pennies a day really to be late, and they usually don't demand that you pay $1.50. So if you have to wait a couple days on nominal amounts, again, you don't need to rush out through a snowstorm to get to the bank to make a payment. It can wait a day or two. Now, installment requirements are what usually trip up quite a few people. If you owe, and this applies to employed, self-employed, whatever, it's just as an individual, if you owe more than $3,000, Generally, CRA is expecting that you are going to pay them installments quarterly through the next year on March 15th, June 15th, September, and December 15th to at least match up what you owed them the year before, because they are presuming that the past will predict the future on that and will be the same. Now, there are situations where you don't need to make installments. For example, a lot of the times you may sell a big asset or a business and you have like a $200,000 tax bill. And then CRA sends you a notice saying you have to send us 200,000 in installments and you're retired. Well, you don't need to send it. They're just assuming you owe them that. If they request installments, but your current taxes are less than $3,000, there's not going to be any penalties or interest for not making the installments because you didn't owe the tax. So you don't need to prepay what you don't owe. Now, another one is if they request the installments, but current year taxes will be higher, they can only charge you penalties and interest up to what they requested. So if they ask for 10 and you're going to owe 20 and you don't send in anything, they will charge you the installment interest and penalties based on 10, not what you actually owed, because again, they can't charge you for what they never asked for. That's not fair. Now, the third scenario is if they request installments and taxes owing will be less than requested, but still over $3,000, the penalties and interest will only apply to the unpaid amounts up to the actual taxes owing, not the requested amount. So if they think you're going to make 8, you make 4, you sent in nothing, penalties and interest are on 4. So again, I get a lot of people asking, oh, well, do I have to make this payment? And the answer is, well, it depends. Are you making the same? Are you going to pay? Was there some reason you owed a lot? Did you sell a lot of investments and have big gains that you're not going to have again this year? So, it might be that you owe it or should pay it. It might be you should pay more, or maybe you just don't have to worry about it. But if you know what the rules are and can just get a tax estimator or ask a professional or whatnot, then that's one thing you can either take care of or not stress about. Now, as far as how to pay, they actually have a pretty good page on your options. I was talking to Tita before this started. Don't Google around to find out how to pay things. Just go to CRA and search for the personal tax payments and how to pay. They actually do pretty good on explaining your options. It's basically for personal tax, you can make payments on your account using your social insurance number under a standard payee under bill payments. Same with installments, amounts owing for current years, etc. If you pay and it goes to the wrong year, you can always phone CRA and request that they move the payment and apply it properly. If you feel like sitting on hold for an hour and a half, since that's basically what COVID did to us, but you can do that. The phone number for that is actually 1-800-959-8281. But TalkUS is a pain. I think it's like 6 and then 5 or something. They change all the time. So yeah, that's the personal taxes. Are there any questions on that subject? Nothing? Okay. Okay, for those of you that are incorporated, oh, and I should mention for self-employed people, I do get this question a lot, so I just mentioned it. It is not a separate tax return if you are a proprietor or a partner. The partnership income, the proprietorship income is reported on some sheets within the tax return, typically the T2125 statement of business activities form that has the revenue and expenses. And that just feeds into the main part of the tax return. It is not a separate filing. It is fundamentally part of the tax return. If you want to know what categories of expenses, etc., you can always download that form and take a look at it. Although a general rule of thumb is anything you spend to make money is deductible unless there is a specific rule that says it's not. And those are mostly things rich people have abused, like golf club dues or private club memberships. Basically, anything that's a private club that they're claiming they meet people at for $100,000 a year. Those things have specific tax rule against them. Everything else is fair game, so long as you can show a business reason for it. Now, going back to the corporate taxes, and most of you, if you start making more than you need to live, or you have a business with potential liabilities, et cetera, which I'll go more into depth tomorrow, will probably end up incorporated at some point. Now, you don't need to be incorporated to start in business. You don't even need to register a name. You just start selling and report it on your tax return. The barrier to entry is quite low. But incorporating does give you some advantages, but I'm not going to go into that in depth right now. They are a bit different though, because when you're personal taxes, it's always on a calendar year. January to December, you have to report. When you're incorporated, the corporation, and by extension its tax return, can be on a calendar year if you choose, or basically any other day in the year. It doesn't even have to be month end. You could do it at March 5th if you want, although that would be very annoying. If you were bringing something like that to me, I'd probably look at you crosswise. But you can pick non-calendar year ends, and there are some good reasons for that sometimes. The filing deadline is not at your year-end date. A lot of people will contact me 10 days before and be like, what do I need before, August 31st year end? And I say, well, nothing, finish your bookkeeping up to that date and I'll talk to you in October. Once you have everything together, unless you have some decision like for remuneration that you have to pay before year end, there's no tax filing. The tax deadline is 6 months after the fiscal year end date. Now, same deal as personal. That is just the date at which any filing and taxes owing from that date will have late filing penalties attached. If you owe no tax, if you have a refund position, you don't really need to file. In fact, I've often recommended, to a lot of North Forge founders or whatnot who became clients, they'll contact me and be like, oh, I need to file my corporate tax return. I say, well, are you still pre-revenue that year? Did you sell anything? I say, no. Are you doing an R&D claim? You need a refund? No. You can't possibly owe tax. So, I'll do it. You can pay me $1,000 to take care of everything. But if you don't need it, why don't we wait a year until you're selling, and then we can do two. It'll be a little cheaper overall. And you have $1,000 to spend on something else. And I like money, but I'd rather people give it to me when there's some value to be done and not when they are trying to bootstrap, their startups. But again, if you do have some sort of refundable credit, like manufacturing investment tax credit or research and development tax credits, those you need to file the tax return to get that money back. So that's a whole other reason to file. And the deadline of 6 months after does have an impact. And for SRED, I didn't put this down, 18 months after the fiscal year end, you can no longer claim for SRED credits. So you can't file an amended return or a late return a year after the filing deadline. Now, if you owe taxes, they will start charging you interest for 3 months after the fiscal year end for Canadian controlled private corporations, which 99.9% of you would have. If you, for some reason, have a foreign controlled corporation, like a partner in Europe that has control, different tax rates and interest will start to accrue after 2 months. Or, if you get up to a public company, but, you wouldn't need me to tell you that because you probably have a team of accountants at that point. Same issue for installment requirements as for personal. If you owe more than $3,000, CRA expects installments to be paid based on last year's return, but they want it by default monthly. Quarterly installments can be requested if you hit certain criteria, but the default is monthly installments. And if you fail to pay them, they can lead to additional penalties and interest on that. Same issue for the installment situations as for personal. If you're under 3,000 in tax, doesn't matter what you owed last year or what they asked for, you just don't have any installments. If it's higher than what they asked for, they'll only charge you interest and penalties on what you didn't pay that they requested. And if it's less than what they asked for and you didn't pay it, it's only up to what you owe. Now, again, how to pay. CRA has a good page on options for business. And you can also make payment arrangements through here. However, with corporate taxes and all the business taxes, there is not a payee under the standard bill payment section for online banking. Most online banking systems have a separate little subsection, and each bank has a different. I know in the bill payment section of RBC, they have a pay business taxes along the menu on the left side. Scotiabank has it up along the top bar when you're in there. When you click on that, it opens up a subsection, like a separate window of the bank, where you are putting in your business number, which is the 9-digit, corporate or GST or payroll number. They're all the same number. They just have a different extension. RC for corporate, RP for payroll, RT for GST, and 0001, maybe 2 if you had an amalgamation or something. And you will basically put in, pay from this account for this period, and it will send. It will not remove the money from your account though. So I've had people that they're used to seeing the bill payments standard way. They make the bill payment, money is relieved from the account. In this case, they don't see it go out. They assume they made a mistake and they go put it through again. And then CRA takes twice the money, because what you're really doing with this is sending a message to CRA authorizing them to debit your account whenever. And it usually takes a day or two. So don't panic and accidentally pay them double. They don't like to refund those things because they'll always make you jump through hoops to say, well, why did you send us too much money? Do we really owe it to you? Prove it. And that can be, devastating in some cases if you really need that money to pay bills. So that is a simple but dangerous mistake when you're paying business taxes. So now, any question on the corporate taxes side of things? Either in chat or off mute.
Looks like the chat is free. Thanks for asking.
Sorry?
Looks like the chat is free. Thank you for asking.
Oh, okay. Yeah, I have it up here too.
Wonderful.
Okay. On to GST, HST. This is the one where a lot of people, most of us are familiar with filing income taxes, and filing corporate tax. Oh, I didn't get into that. Filing corporate taxes, you can't, like filing personal taxes, you can do it yourself. If you want to go hire an accountant, great. I'm more than happy to do that for people. I usually prefer when they're self-employed or have investments or things that might be a bit different. People with like a T4 slip and an RSP contribution, there's really no planning that can go into that unless you have a weird marital situation or support payments. You can just file, and even if you make a mistake, CRA will just correct it based on the slips. So, those ones are fairly simple on that. Corporate's a different beast because in self-employment income, you really don't need financial statements or even a bookkeeping program. The statement of business activities only ask for revenue and expense categories. They don't care about your balance sheet, your inventory, your cash balance, or liabilities, your loans. That's your problem. So it's really easy to file that. And even people give me the stuff, I put it in, might ask some questions, but I'm not going through it with anywhere near the detail that I have to with corporate. With corporate, CRA wants you to put in what's called the GIFI, and that's the General Index of Financial Information, which is the balance sheet and income statement for the company. So all your assets, all your liabilities at year end, all your your equity, share capital, and then all your revenue and expenses. So, which means you have to have a proper accounting system, and books and likely financial statements prepared. I mean, I pretty much have to do the work to do financials just to get the data to put in the tax return anyways. And there are a lot of little nuances, add backs, certain things that are deductible for accounting, but have different rules for tax, like those penalties and interest. You can pay them, but CRA won't give you a tax deduction on the installments and penalties they're charging you. In fact, they won't give you a tax deduction on any interest or penalties charged by any municipal, like any judicial source. So if a vendor charges you a penalty, that's deductible. Like, if you're late paying Coca-Cola, you can deduct their penalty and interest on the invoice. That's just a business expense. If you have a speeding ticket, it's judicial source, they can enforce it. So no, that's not deductible. Same with any GST source deductions, etc. So not only do you pay the fine, you also don't get a tax deduction for it. So you're kind of hit again on it, versus other types of business expenses. For that reason, like if some people have a nil corporate return, you can file what's called a T2 short. If people want to file it, I'm biased, of course, but I generally, recommend that you get some professional assistance getting the corporate return filed. Particularly if you have anything different on it, and the schedules are very different. Any questions on that bit I just threw out here? Okay. Okay, going back to GST before my little aside there. I'm going to touch on a couple little items here as far as how it's calculated, because that also leads to a lot of confusion and paralysis on how to handle it. Number one, GST and HST. They are the same tax. They are reported on the same return. In fact, the amounts collected are reported in the same box with no distinction for GST collected or HST collected. It's just GST/HST and revenue, etc. Now, the rate charged depends on whether you are selling into a province with separate provincial sales tax, like BC, Alberta, which has no sales tax at the provincial level, just GST, and Saskatchewan and Manitoba, or one where the province is allowing CRA to collect a provincial share under the same rules as GST. So, but just with the equivalent, 7 or 8% provincial tax that you would otherwise have seen if they were collecting it directly, but they just don't have their own rules. Ontario and pretty much every maritime province has those. Now, the amount you need to charge depends on the place of supply rules. Those can get a little complex depending on the situation, but basically, in the case of physical goods, it's where the customer takes possession. So and not where the customer is, not where you are necessarily. As an example, if an Ontario customer drives into Manitoba and buys something from you directly and you hand it over in downtown Winnipeg, it's a Manitoba sale. Okay, doesn't matter where they're originally from, because then they are taking it back over to Ontario. Now, so you'd have to charge GST and possibly RST unless it's an exempt good. If you were mailing it to them in Ontario, well, they're taking possession in Ontario, so it's considered an Ontario sale, and you have to collect HST and not Manitoba RST. So it's really important to know kind of where they're taking a hold of it and not to get hung up on where the customer's address or your address are. It's all about where they take, where it takes possession. Services is generally where the customer is located. So if you're an electrician doing work for someone in Manitoba, that's easy. You're on location, you're doing it. If you're a programmer, it's a bit different. I have a BC programmer, a guy who lives in BC, who does programming for a California company. Even though he's in BC, it's considered an exported service because his customer is in California. So he doesn't charge any GST or HST because the customer and where the place of supply is happening is technically outside the country. Same if you're shipping a good outside the country, you do not collect GST, HST. Likely you won't be collecting US sales tax either, although there are some special rules on that, usually whether you have nexus or whatnot. That's going way beyond this course, but TaxJar actually has a nice little picture of the US that you can click on each state, and they give you the registration requirements and sales for certain sales taxes. They can be relevant if you're going and doing, you know, like if you go to a trade show, for example, and you sell there. Well, if you're in, you know, Wisconsin, they might want you to collect Wisconsin sales tax, you know. But if you come back and then you're shipping into it, they don't really have a way to force you to, unless you get a permanent establishment or an agent. Again, beyond that, but it can matter in this online interconnected world. And there is a push internationally for people to, you know, force you to collect. But again, how Belarus can force you to collect their sales tax when you're shipping out there, and especially when all their stuff is in Russian, it's like, how would you even research that? But they really have no way to enforce those mechanisms yet, unless every country kind of agrees, and that never happens really. Now for GST, there is a registration threshold. You've probably heard people mention this before. It's at 30,000 of revenue in a year, quarter, or any 12-month period. Meaning once you hit this, again, it's not like, oh, I sold 100,000 this year, so I'm going to register next month. It's once you hit 30,000 within that year, you're supposed to register within like a month, or any 12-month period. So if you have a big glut of seasonal sales, it might force you to register, even if you know, you could be selling 25 grand one year, 25 grand the next year, but had a huge glut of like 35,000 of sales between November and February. Well, you've hit that registration requirement. Once you're registered, you don't stop collecting if your sales fall below 30,000, because once you're in, you're in. You collect $1, CRA wants a nickel. So, so unless you are able to deregister because you've shut down the business, you have to keep collecting it. Now, the upside, and this, depending on your business or how much startup costs you have, there's no real disadvantage to registering early, because you're not paying the GST, your customers are. And if your customers are B2B, you're just charging businesses, they're probably GST registrants themselves. All GST registrants, they have to collect, but they also get to claim a refund on the GST that they have paid on their expenses. So, you know, if I buy some inventory and I pay, you know, $105 for it, including $5 GST, and then I turn around and I sell it for $150 and collect 7.5, you know, $7.50 GST, I only have to send $2.50 to the government, because it's what I collected less what I paid on that. So what you can do if you're setting up a brick and mortar location or something, you might want to register day one so that you can claim GST that you're going to be charged on your inventory or your leasehold improvements or your machinery or any of these other items. Because that is effectively building in a 5 or 12% or whatever discount on what you're buying, and with no real downside other than administratively. And you can't back register unless you can go back 1 month, unless you can show that you were collecting GST as an agent back at that day, like on invoices. You can request a back registration to when you started collecting, but otherwise you can be a little dead in the water here and miss out on some advantages. Again, there's some nuance. I'll be going over that tomorrow, but I wanted to at least mention that because that is kind of some compliance items that will help you file on that. Any question on that kind of quick primer on GST? No. Okay. Okay, with filing options. this is really a legacy, but you can file with a magnetic ink return at a financial institution, but you have to request CRA to send you personalized forms. I'm not sure if they've changed that recently, but it's been a real pain. The easier way is usually to pay through the paid business taxes option in the bill payment section. And again, as I mentioned in here, they don't transfer the cash hour immediately. Apparently I wrote that too late. But so you have to be careful, see that. And there is also payments you can make through the My Business account or other things for, e-transfers. CRA is kind of widening what they accept now, Visa debit cards, etc. For filing the actual return, if you file through pay business taxes, you do have two options. You can either make a payment, or you can actually file the return through that and make the payment. So for the period. So that will kind of take care of both of them. You can file the return through the My Business account, which again, it's available to anyone who has a registered business number, and it uses the same login as your individual My account. Most of you probably have it either from personally filing, or anyone's collected CERB or CRB this year or in the last 2 years, you would have the My account so you could do the application. You can use that same login to log into the My Business account, and then you effectively claim the business number, because CRA should have on their records, that you are the owner. So it's a pretty simple task to claim the business for yourself there. Sometimes they don't update the registry. That's where you have to talk to your lawyer and see who's on file there. But again, make sure those are kind of filed on time or paid on time, because you do have various filing period options. Some of them are open to you as you make more money. Some close off, like they won't let an annual filer over a certain amount of revenue be an annual filer. They'll force you to be quarterly or monthly, but in the beginning you can pick whatever. The year-end date for GST filing can be a calendar year, or same with the corporate fiscal year once you've filed. And you can kind of elect to switch between them, but you can't pick a different fiscal year than the year end unless it's calendar year. The annual filer for GST is due 3 months after fiscal year end. There is one exception I forgot to write down. If you are an annual filer and you're a self-employed proprietor, they actually make the filing deadline June 15th to match your personal tax filing deadline. So you can wait, you can send in GST collected so that the money's on your account, so it's not a big surprise, but file the return alongside your personal tax return so that you are confident that you've claimed every input tax credit, or if you have an accountant looking at it, and it can be filed at the same time. But for corporate, or it's 3 months after fiscal year end. For quarterly and monthly filers, it's always due 1 month after the quarter or month end for the filing return, and then interest will start to accrue on that. Now, you can have installment requirements for GST. It's annual filers only. The annoying thing is CRA won't send you anything saying you owe that. They just will charge you interest for not doing it. If you owe more than $3,000 in net GST in a year, CRA expects quarterly installments equal to 1/4 of the prior year payments. They don't send out a formal request, but will charge you interest. So you either send in what it is or estimate what you think it'll be and send them some money into the account. Again, for paying, same payment options as corporate tax, and payment arrangements can usually be made if, because what often happens is you might be filing the GST based on the sales you made, but if you have a slow collections period, you might not have the cash at year-end date and maybe for a while, especially with COVID. So because your customers might not have cash, in which case you might just have to make payment arrangements with them to spread it out over time. Not ideal, but life happens. Any questions on GST for this part? No. Okay. Okay. Manitoba RST. The registration threshold is $10,000 of applicable sales, so smaller than GST. And there is no recovery of RST on expenses that you've paid. It's a bit different. You have to collect it. You can do an internal adjustment if you paid RST in error, but that's usually only on items that are being resold to customers or used in manufacturing. Because instead of just paying GST to the people selling you stuff and then claiming it as a reduction, you have to provide your vendor to sell you materials RST exempt, so you just don't pay that. So it's a different way of making sure the customer or the first RST non-registrant or the final consumer is the one that pays the sales tax. And if you aren't registered and you are doing stuff that would be subject to RST, well, then you're paying it and you have a 7% increase in your costs and your inventory. So this can be especially annoying for, say, general contractors, because supply and installs on real estate are considered RST exempt, but the contractor is considered the consumer. So sometimes they buy materials RST exempt or from out of province, and then they do a supply and install job and they don't charge RST, but then they realize they didn't take the extra 7% on materials into account, which just eats their profit margin up. So especially if it's already tight, that can be devastating. So it's worth knowing the rules if you're getting into the area. The other thing that gets a lot of people in trouble with RST is that if you buy anything from out of the province or the country and you're a registrant, well, even if you're not, but they have a hard time going after individuals and whatnot, that is for your consumption, be it an office supply or a piece of machinery that's going to be a capital asset. You are expected to self-assess the 7% RST that you would have otherwise paid if you bought it on a Manitoba thing. And even if you paid, taxes at the border when they brought it in, that's a federal agency. So they only collect GST, HST. They do not collect any Manitoba sales tax. So this can be an issue if you're buying something from Ontario or from California or Amazon or whatever, that is substantial. And I've had people ship over a piece of machinery from Ireland for $250,000, and then I'm like, you owe about $19,000 in PST based on the fair market value when you brought it in here. So it's not a good news time, and it can often mess up people's budgets if they're not expecting that extra 7%. Although you can recover it if you're incorporated and you're in manufacturing or processing, including restaurants, because you're processing food into something else, so ovens, etc., because there is a manufacturing tax credit that effectively rebates you the RST on anything bought for those purposes. Okay, but that one sucks, and RST has about 4 years to audit you before it falls off the table, and they can't go at you unless they can prove that there's some willful fraud. That's another thing I forgot to mention. For corporate GST PST or corporate GST personal tax, once you file, after 3 years from the date of assessment, it's considered statute barred, and they can't open it back up unless you file an amendment and the 3 years resets. So again, unless they can prove that you had some sort of actual, evasionary criminal activity in there, or filed something fraudulently, they can't just go back and say, oh, we didn't audit you 6 years ago, and we don't think you can claim these deductions. Well, too bad, you accepted the assessment 6 years ago. We're outside the 3-year reassessment period. But if you amend your return, it resets, which can lead to problems if there's any skeletons in there. Back to the Manitoba RST. The filing options, the easiest one is just to register through Manitoba's Taxes filing system. and just file the return online. You can authorize a direct deposit draw through there. I'm pretty sure you can file and pay through paid business taxes, same as GST. You can also file a manual RST return and send it in. Now, the filing periods, always on a calendar year basis. And whether you're annual, quarterly, or monthly, they're always due on the 20th day of the month following the year, quarter, or month end. So January 20th for December 31st year end, which can be a real pain because, you know, you might not even have your books ready. The only thing is with RST, it's easy. What did you collect? Send it to them. So you can file the return. But unlike some of the others, their penalties will apply on unpaid amounts. So you can file on time, but if you don't send the payment in, they will charge you the late filing or late paying penalty. Unlike corporate tax, personal, etc., CRA will only charge you late penalties when you don't file, even if you owed tax. Manitoba Finance is a bit more draconian than that. How to pay, taxes, check. There's a lot of good bulletins in plain language in Manitoba Finance for RST. So they have instructions there. They also have a really good list of, what's exempt, what's, not. General rule of thumb for RST is like with GST and HST, everything is taxable unless they're on a list for being either zero rated or exempt. And there's not a lot of those. It's like food, diapers, medical supplies, prescriptions, etc. But otherwise, it's by default collectible. With PST or with Manitoba RST, all goods are subject to collection unless there's a rule that says it isn't, whereas all services are not subject to charge RST on it unless there's a rule that says there is. So if you don't find something that says your specific work or what you're selling is as a service is subject to RST, it's just not. With goods, if you don't find something that says you don't charge it, then you charge it if you're selling into Manitoba. Closer time, but I only have, I think, a couple more little items here. And I'm not going to spend a lot of time on this. HE levy, again, it's an extra charge tax rate. If your payroll's under 1.75 million, you don't worry about it. But if it's over, you start to worry about it. Otherwise, if you're in startup phase, don't worry about it right now. Payroll source deductions. They're withholdings on employee remuneration for CPP, EI, income taxes, plus the employer CPP, which matches the employee CPP, and employer EI, which is 1.4 times employee EI. Penalties can range from 10% of unpaid amounts up to 100% of unpaid amounts if you don't send them the money on time. There's not really a return. You can send them the money and not file a return. There's no penalties. You can just you just send them the cash, again, through the online banking or whatnot. I've included, based on your remitter type, when the remittance due dates are. They're generally the 15th of the month following the month you made the wage payments. So any payments that fall within that month, the source deductions on that have to be sent in on or before the 15th of the following month. Don't send them in early before the end of the month because CRA will just assume that it's late from the month before, and then you're stuck arguing with them to take penalties off. You see there's a bunch of remittances, but these depend on having, certain minimum amounts of monthly payments. So you're going to be quarterly or monthly for a while, most likely. Payment options, identical to GST and corporate tax. And then you have the information return filing, which is the T4 slips and the information return that effectively reconciles what you paid with what you should have paid, and hopefully they match up. And if you are late, they're always due by February 28th of the year following the calendar year, regardless of your fiscal year end if you're a corporation. So that's why sometimes you might want to move your year end forward a bit. so that you have more time between when the year-end corporate return and remuneration for yourself has to be calculated and when you have to file the slips, because 60 days after December 31st is a little tight. You might not even have your records ready for 4 months. You can file through my business account, and if you're late, the filing penalty is $100 per late slip. If you file a slip and you have to amend it, there's no penalty for amending it. Although with payroll, it does tend to draw some attention, and they might do a little mini audit of it. So I don't recommend it unless you have to, but it is an option. Okay, won't spend too much time on this. This can all be found on CRA's website. Anything on payroll quickly? Any questions? Okay. Penalties and interest. Interest on all these accounts with CRA are charged at the prescribed interest rate, which they review quarterly. It's currently at 5% annually. Penalties can vary by account and compliance history. Like I said, tax return late, first time is 5% plus 1% for each full month late. If you are late again, it's 10% of taxes owing plus 2% for each month filed late. And even if you got interest relief from COVID-19 or other things, penalties can still apply. For corporate tax, same thing as for personal tax for late filing. GST, there's more calculations in this, depending on whether they did a demand to file and you didn't do it, or a failure to file on time. It's usually works out a bit less unless they do a demand to file and you didn't do it, in which case it's $250. These failure to file electronically are just if you file a lot of them, they sometimes need it, but it's a pain to do manually, so I don't worry too much. Payroll source deductions are the ones that are annoying, because penalties, for that is, they can go to 3 to 20. I've seen 100% penalty sometimes, although they don't disclose that. Usually it's 10 because it's rare that you're just going to be a couple days late. And if the 15th falls on a holiday or a weekend, it's always the next business day that the deadline is. So if it's on a Saturday, 17th is the new deadline on Monday. That's for every filing deadline, by the way. For Manitoba RST, minimum penalty $10, 10% of tax due if they don't have it by 4:30 of the due date, so not even midnight. And they won't give you the commission, which is pretty negligible for the most part when you collect it. And they can charge you other stuff. Now, there are penalties and interest relief available. The two common ones are voluntary disclosure program, which applies, it's a federal program, although Manitoba has a similar one, it's a little less formal. It applies to taxes, GST, source deductions. They'll eliminate penalties and interest on the penalties, but not interest on unpaid taxes. And there has to be 4 elements that are met. The filing has to be complete, can't be amended later, or if CRA finds something, unless you can just show that you really didn't know. They have to be voluntary. They can't have enforcement action saying, oh, you need to file a return. And then you say, oh yeah, here's my 5 other returns for this one. Once they send you a request, you're dead in the water. Even if they send a request on unrelated thing to your spouse, it might take this off the table. It has to involve the application or potential application of a penalty. So if you might not have a penalty, but you might have one if CRA say, disallowed an expense, then maybe you could still claim it under here. And it has to include information that is at least 12 months overdue. I won't go on this one, but you can include information that is less than 12 months overdue, so long as, there are other related returns that are 12 months overdue. So if you have 5 tax years that are late from like 5 years ago, and this one's late by like a week, you can file them all together, even the one that's within, because it's kind of part of the package that includes information 12 months late. The other one is taxpayer relief, called fairness. They can relieve penalties and interest based on facts of the case. You basically have to write up the story. And it usually has to be pretty extreme. Deaths in the family, sickness, mental illness. Basically, you're saying, I couldn't meet my obligations because of X horrible tragedy that happened. And I probably talked to 4 people in the last 2 weeks that had similar things. And you have a 15-year filing deadline to make a claim. But don't blame third parties. Don't say, well, I couldn't file because my bookkeeper messed up or my accountant messed up, because we're perfect. Or business partners, because if they are like, well, then you should sue them, not talk to us, then they're not going to do anything for you. Okay, bit of a marathon. I think we kind of made it there. A sprint, I guess.
Thank you so much, Michael. If you could, we are at time actually at 1 o'clock. So if we have any questions, apologies. If you're able to stay, wonderful, we really appreciate it. If you're not able to stay, what I can do is if you put your question into the chat, I'll send them over to Michael and he can email you back the answer, if that's okay with you. We can—
I think there's only one question, actually.
Yeah, okay, if we can, think you can answer that in about a minute.
Yeah, to paper if you're fine with you. Yeah, I would say always take the higher number. I mean, it doesn't really matter for that because, even if you said 1, it's not like anyone's verifying that. And CRA doesn't check the individual breakdowns of anything until you file the T4 slips later. So, I mean, you can just even send them money. But yeah, I would say take the higher amount. That's just the number of employees. Okay. And the question there, sorry, was how, if you have different number of employees in 2 pay periods within the same month, what do you enter? It's the higher number.
Thank you so much, Michael, for helping us understand the steps we need to take to file our income and business taxes and for answering everybody's questions. And thank you, everyone, for being a part of the North Forge Discovery Series. This concludes the first of 2 webinars about income and sales tax. We're looking forward to seeing you tomorrow at noon Central for the second course that will deep dive into taxation for taxation of corporations, proprietorships, sales tax, and available tax credits. The link for the event is in the chat. We'd love to see you tomorrow. And check your email for today's webinar resources, the recording link, and the PDF of Michael's presentation. Before we wrap up for the day, we'd like to thank our sponsors, 6P Marketing, Bell MTS, BitSpace Development, Boxstall Construction, Princess Auto, RBCX, Stu Clark Center for Entrepreneurship at the University of Manitoba, and TDS Law. And that's a wrap. Have a wonderful rest of your day, everybody. Take care. Bye now.